Hello and welcome everybody to Gold Asset of the Day for the 28th of May 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, today we will be reviewing gold for the week ahead. So firstly, last week we did indeed see that range-bound trade action with gold, as we'd suggested, the look for evidence for buyers to come back towards the lower end of that channel. So approximately that 1270 zone at the moment is providing a lot of support for gold. We're seeing buyers come back in at that level, and we in fact saw gold springboard last week, again within that $20 range or 200-point range, gold hitting a weekly high of 1,287 US dollars per ounce. So I hope some of you did manage to capitalize on that range-bound trades. There's been really good opportunities just to trade that very tight range on gold at the moment. So what do you need to know as we go into this week? From a seasonal point of view, gold is actually playing right into its normal seasonals here. We've seen the US dollar break out to two-year highs just last week above the 98 zone. US dollar tends to have its strongest month over the month of May, and that term has been coined in the market, sell in May and go away. That's very much the case with a lot of commodities. Usually over the month of May, they do go under pressure. We've seen oil, the biggest sell-off last week so far in 2019, and gold, of course, we saw a revisit back towards the lower end of the trend channel. Now, from a seasonal percentage point of view, normally the month of May, gold tends to finish negative around 1% for the month, and then has a bit of a flat June and starts to build up momentum as we go into July, and then particularly August as we go into the wedding season in Asia, where gold is often, it's gifted during the season. So I would look out for the potential for gold certainly to form a bottom here as we go into June and July. We may see a little bit more pressure over the course of this week. We can see right now gold is sitting around 1,284 US dollars per ounce. It's mid-range at the moment. So essentially we're capitalizing right now on trading gold, buying back in when it gets down towards that 1270 to 1265 zone on evidence of support, and then looking to take profits back towards the upper end of that region of around 1287 to 1290 at the moment. It looks for now as though gold could be due more range-bound trade this week. You can see it's just consolidating at 1284. If it breaks down, it could easily revisit that supportive layer between 1265 to 1270, in which case you could sell it down to that level, look for buyers to come back in, and then potentially if we do get buying back in, then take the trade back towards the upper end of the channel around 1287 to 1290. One point to bear in mind is that hedge funds and money managers, they dramatically reduced their net longs on gold over the latest week, which leads me to believe that if the US dollar was able to stage a bit of a recovery here to the upside, and it is normally on Thursdays where the dollar has its strongest move of the week. Last week on Thursday, the dollar broke out to two-year highs. If we see the dollar build up strength later on in the week, I would look out for the potential, because hedge funds and money managers, they reduce their net long so significantly that if we actually break through this layer of support on potentially a fourth test, we might actually head lower to around that 1260 zone if we were to see that. So you only really want to buy in at the lower end of the trend channel if buyers do come back in. If they don't, and we just break down, you don't want to catch a falling knife, in which case you'd actually be more inclined to sell short into that sort of move. I do note silver today is leading the move to the downside. It's broken down from a bear flag formation. Again, the gold silver ratio has broken out to 10-year highs. That tends to, when the gold silver ratio is going up like that, tends to put pressure on the metals, and gold is just consolidating at the moment. Geopolitical tensions can support gold where it gets a safe haven bid, so look out for any news with regard to Iran and USA at the moment. Any tensions that escalate, geopolitical tensions in the Middle East, can see gold get the safe haven bid, but at the same time, trade war tensions do tend to have a negative impact on commodity prices in general. So look out potentially for the dollar strength to come back in later on in the week. Be mindful that hedge funds and money managers, they've trimmed their long positions of gold in the latest week quite significantly, and normally the month of May is negative for gold by about -1%, and we've still got this week left for May, and then we head into, of course, June next week, and we'll be prepping you for non-farm payrolls next week. So with that, that's been Gold Asset of the Day. I wish you good trading.